Beyond Meat stock sizzled up from fuel thrown onto the fire by a retail frenzy, short squeeze speculation, and expanded distribution at Walmart. That's right, Walmart would carry more of its products, including the new Beyond Burger 6-pack, Beyond Chicken Pieces, and Beyond Steak Korean Barbecue Style, in over 2,000 stores, increasing accessibility and affordability for consumers, particularly as food prices rise. The cook-off also continued from a major debt restructuring announcement, where Beyond Meat converted around $1 billion in convertible debt into stock, stabilizing its balance sheet. Though it's still important to note, Walmart's expanded partnership alone is unlikely to solve Beyond Meat's deeper financial troubles. If the company continues to lose money, it could eventually face bankruptcy. However, the current stock surge is being driven more by technical factors and market speculation than by fundamental improvements in the company's outlook. That's because high retail investor interest, especially on platforms like Reddit, are rife with speculative trading talk, especially for stocks with high short interest. And surprise, surprise, over half of Beyond Meat's shares were reportedly sold short, which has added significant pressure for short sellers to cover their positions, leading to shouts of short squeeze. It's stories like these that prove why you should regularly follow the channel. Because way before Beyond Meat started heating up, we uploaded that video called The Next Big Meme Stock Like GameStop Is, all the way back in March. In that video, Beyond Meat was mentioned, along with the next stock that's gradually gained traction. That's none other than Pony AI, the humble horse of a stock that kept on kicking to outrun a stampede of doubters, to the point now where Stellantis has recognized its might, leading to both companies working together to develop robo-taxis in Europe, resulting in Pony's autonomous driving software being integrated into Stellantis' electric medium-sized van platform, which is equipped with advanced sensors for self-driving capabilities. The initial focus will be on testing vehicles based on the Peugeot e-Traveler model, with trials set to begin in Luxembourg in the coming months. A broader rollout across European cities is planned for 2026. This partnership builds on Pony's recent expansion efforts, including a collaboration with Uber and a newly received testing permit in Luxembourg. It focuses on light commercial vehicles, LCVs, an area where Stellantis holds a strong position in Europe. Both companies will focus on developing SAE Level 4 autonomous vehicles, which can operate without human intervention. Stellantis' A V-Ready platform will be used to integrate Pony's technology, ensuring the vehicles meet the highest safety standards for hands-off, eyes-off operation. Rolling along on Robot Road takes us to Intuitive Surgical, which flashed to a code green for a time following impressive third-quarter results. Its adjusted earnings was $2.40 per share, well above the estimated $1.99, and revenue grew 23% year-over-year to $2.51 billion, exceeding estimates of $2.41 billion. Procedure growth was a major driver, with total worldwide procedures using its systems up 20%, including a 52% surge in Ion procedures and a 19% rise in Da Vinci procedures. Intuitive placed 427 Da Vinci surgical systems during the quarter, a 13% increase from the previous year. Notably, placements of the new Da Vinci 5 system more than doubled to 240 units, reflecting strong adoption. As a result, the installed base of Da Vinci systems grew 13% year-over-year to 10,763 units. Instruments and accessories revenue also saw a 20% increase, while systems revenue surged 33%. On top of that, Intuitive repurchased 4 million shares for $1.92 billion, signaling confidence in its long-term growth. To help out its health even more, it received US FDA approval for AI-driven software enhancements to its Ion endoluminal system, a robotic-assisted bronchoscopy platform. The integration of AI and advanced imaging aims to improve the accuracy and efficiency of lung cancer diagnosis, reinforcing Intuitive's position in minimally invasive surgery. Sticking with the health theme, Plus Therapeutics, a clinical-stage pharmaceutical company focused on targeted radiotherapeutics for central nervous system, CNS cancers, announced significant progress in the commercial launch of its CNSide diagnostic platform developed through its subsidiary, CNSide Diagnostic LLC. This includes the expansion of its manufacturing footprint, key leadership appointments, and continued commercial readiness. CNSide's diagnostic platform, which detects tumor cells in cerebrospinal fluid, CSF, was initially launched in Texas following successful CLIA accreditation. The company is expanding nationally, with a major milestone being a new national policy agreement with United Healthcare, covering over 51 million people. Other ongoing commercial efforts include expanding state licenses, establishing lab reimbursement codes, and increasing commercial payer contracts. CNSide's assay platform has garnered strong interest from National Cancer Institute, NCI, designated cancer centers across the U.S. In manufacturing, Plus Therapeutics secured a new purpose-built laboratory facility in Houston's Texas Medical Center, the world's largest medical center. This state-of-the-art facility will accommodate current and future commercial production needs, enabling scalability for all throughput scenarios. The location also offers proximity to major medical institutions, including MD Anderson Cancer Center, enhancing collaboration opportunities. Additionally, Plus Therapeutics highlighted the success of its CNSide CSF assay platform, which has been performed over 11,000 times since 2020. The platform boasts high sensitivity, 92%, and specificity, 95%, and has influenced treatment decisions in 90% of cases. That's 90% more reason to keep watching Plus Therapeutics and these other stocks into November and beyond. For more on stocks and crypto, follow Ascencore. See you next time.